Imagine a company announces massive layoffs, shedding thousands of jobs. What's your immediate thought? Stock crash, right? Well, what if I told you that same company's stock surged immediately after? This isn't a paradox from a dystopian novel. This is Meta Platforms, April 2026, and their audacious move to fire 8,000 employees while simultaneously pouring an unprecedented $600 billion into artificial intelligence is not just a headline. It's a seismic shift that could redefine the tech landscape and, critically, challenge the undisputed king of AI chips, Nvidia. The question isn't if AI will change everything, but who will control its very foundation. And Meta just made its move. For years, Meta, under Mark Zuckerberg, has been synonymous with social media and, more recently, the ambitious, often ridiculed metaverse. But behind the scenes, a far more significant transformation has been brewing. In mid-April 2026, the company confirmed what many analysts suspected. AI is no longer a side project. It is the core. The numbers are staggering. Meta plans to invest over $600 billion in AI infrastructure by 2028, with a significant chunk, between $115 billion and $135 billion, earmarked for 2026 alone. To put that into perspective, the entire industry, including giants like Microsoft, Amazon, and Alphabet, is projected to spend around $635 to $650 billion on AI infrastructure in 2026. Meta is not just participating, it's attempting to dominate. But here's where the story gets truly dramatic. The layoffs. Approximately 8,000 employees, or about 10% of Meta's global workforce, are being let go. This isn't a sign of financial distress. Instead, it's a brutal, calculated reallocation of resources. Zuckerberg is effectively saying, every dollar, every ounce of human capital, must now serve our AI ambition. The most direct challenge to the existing order comes in the form of custom AI chips. Meta has expanded its partnership with Broadcom to develop its own application-specific integrated circuits, or ASICs. Why is this so crucial? Because for years, Nvidia's graphics processing units, or GPUs, have been the undisputed workhorses of AI. They are powerful, but they are also incredibly expensive, with a single flagship Nvidia GPU costing upwards of $30,000 to $40,000. Meta's move into custom ASICs is a direct shot across Nvidia's bow. Custom chips, like those Google has developed with its tensor processing units, are designed for specific AI workloads and can be significantly more cost-effective, estimated at around $12,000 per unit. This isn't just about saving money. It's about control, efficiency, and breaking free from a single supplier's chokehold. The market is already reacting. Analysts predict that the share of ASICs in AI servers will jump from about 20.9% in 2025 to 27.8% in 2026, while GPU market share is expected to decline proportionally. This signals a significant shift away from Nvidia's near monopoly. Companies like Broadcom and AMD are already outperforming Nvidia in the AI chip market in 2026, fueled by these new partnerships. The implications for investors are profound. Nvidia, while still a powerhouse, faces increasing competition and the potential erosion of its market dominance. For Meta, this massive investment, despite the short-term pain of layoffs, is a bet on long-term AI leadership. The stock market, surprisingly, has rewarded this bold strategy, with Meta's stock rising approximately 5.7% after the AI-focused layoff news, trading around $632.50. This suggests investors see the layoffs not as a weakness, but as a necessary, albeit harsh, step towards a more AI-centric and potentially more profitable future. This isn't just a story about Meta or Nvidia. It's a microcosm of the broader AI arms race. Every major tech company is pouring billions into AI infrastructure, recognizing that the future of technology, and indeed the global economy, will be shaped by who controls the most advanced AI capabilities. The question now is, will Meta's audacious gamble pay off, and will Nvidia be able to adapt to this rapidly changing landscape? Let's consider the broader economic impact. The sheer scale of this investment, hundreds of billions of dollars, will create new industries, new jobs, and new investment opportunities. However, it also raises questions about the future of work the concentration of power in the hands of a few tech giants, and the ethical implications of such advanced AI. The Great Tech Reset, as some are calling it, is characterized by companies like Meta making tough decisions to pivot entirely towards AI. This isn't just about incremental improvements, it's about fundamental restructuring. The companies that succeed will be those that can not only innovate in AI but also efficiently build and manage the colossal infrastructure required to power it. So, what does Meta's $600 billion AI pivot mean for your portfolio? It means understanding that the tech landscape is shifting at an unprecedented pace. Nvidia's dominance is being challenged, and new players are emerging. Diversification, staying informed, and looking beyond the headlines are more crucial than ever. Do you think Meta's massive AI bet will pay off? Will Nvidia maintain its lead? Or is this the beginning of the end for their GPU monopoly? Let us know your thoughts in the comments below. If you found this analysis insightful, make sure to like this video, subscribe to our channel for more in-depth financial breakdowns, and hit that notification bell so you don't miss our next upload. We're tracking these stories closely, and you won't want to miss what happens next in the AI chip war.